What's going on, guys? Welcome back to another weekly stocks and shares ICE update. Before we get started, if you guys want a free fractional share worth up to £100, click the first link in the description. Anyway, let's get started the video. So as you guys are probably well aware, we did have a sell-off during the end of last week. We did get good news of the US government reopening. We did rally after the news, and then we had a massive sell-off just because I think the main reason was a realization that we're going to start having economic data coming through. And as much as Trump would like to hide it, the US economy is slowing down, and there are some potential worries regarding it. Obviously, I'm still massively bullish long term on the US economy, much more bullish than I am on the UK economy. But there are some slowdowns that it's not all roses over there. So yeah, we did have a little bit of sell off. I'm not too fussed about it. It's just a general buying opportunity for me. Unfortunately, I wasn't able to buy my stock shares ISA because, as you guys know, I have nothing left in my allowance. I've maxed out my allowance. Hopefully, I still get the same 20k allowance next tax year. We'll have to wait and see. The budget is coming in about a week's time, so I'm looking forward to that. Let me know down below if you want me to make a prediction video for the budget. I said I was looking to make it that. I still am open to making it. So if you guys want to see it, make sure you let me know down below. So anyway, what has this sell-off meant for my portfolio? So as you guys know, I'm heavily invested in Tesla. It's my highest conviction play. I do get a lot of stick regarding, my concentration in Tesla, but obviously not financial advice. But the reason why I'm so heavily invested is just because I see such a big disconnect in the asymmetric risk. So what that means is that there's a higher risk of me not being invested and missing out on the opportunity cost in terms of how much the upside is compared to how much potential downside there is. So based off my valuation model on my 2030 numbers, if we take out everything to do with AI, which is completely unrealistic, and we just look at the car business and the battery business, I'm looking at it being about a $280 to $300 stock in 2030, and that's stripping everything all of the good parts, the juicy parts. The reason why I'm investing in Tesla, the humanoid robots, the full self-driving, the AI chips, the new design in chips. Obviously, I was a bit naive when I previously invested, when Tesla was talking about their dojo and directly competing with Nvidia. They have since backtracked on that, which, to be honest, in hindsight, if I'd done more research into Nvidia's architecture and on their competitive advantage, maybe I could have saw this coming. Obviously, and then that would have made me invest in Nvidia earlier. Because the reason why I didn't invest in Nvidia when it was, a tenth of the price it is now, in 2022, was because Tesla was pursuing Dojo. So obviously, you live and you learn. Obviously, I don't make all the right decisions, but Tesla was an opportunity that I saw that I just didn't want to miss out on. So anyway, going back to the asymmetric risk. I do see, a 10x potential over the next 10 years of Tesla, whereas if we look, in the downside risk, I only see losing 50%. So that's a massive swing where the cost of not being invested, obviously in my opinion, not financial advice, is way higher than any cost of it falling 50%, worst case scenario. So yeah, that's kind of a bit of explanation. And obviously I'm young, I can afford to be in these really high risky strategies. If I was was in my 30s, had a family, or even later on in life when I'm going to retire, obviously I'm not going to invest like this. I'm not going to have such a high percentage of my portfolio in one stock. But generally I see it as less risky as just buying the S&P 500 because of the conviction. We just saw a sell-off, and then at the end of last week, if I was just in the general market, obviously I have the historic returns for the market and how it's done, like 10% a year and all of that. But because I haven't done the research in the portfolio of the S&P 500 as a whole, I have less conviction. Tesla, I have such strong conviction. When I see a dip, I'm just going to buy more. So if there's anything you guys can take away from this video, is that do your own research in stocks, build up that conviction, so you don't end up, because a lot of investing is emotion, and everyone needs to learn how all their emotions take into effect when it comes to buying and selling investments. So yeah, I try and take my emotion out of it. Obviously, I'm not perfect, but yeah. Anyway, guys, so current value £140,000. It has dropped down from 150 to 140, still up 51%. So, like, if we're saying if worst case scenario it does drop 50%, I still have that buffer zone where I'm not actually losing money. I'll just be losing my profits. Obviously, my other position, Nvidia, I did buy at the peak. I am down 6% on Nvidia. Got one share, just got a little bit of extra cash. I did get in too late. The signs were there at like $19 a share. If you go into the max, and not even in 2025, if we go to earlier in 2020, 2023, 2022, when ChatGPT first launched, then the signs of the writing was on the wall. But you live and you learn. Robinhood, I did obviously miss out a lot on Robinhood. If I could bought it in 2023, that would have been great. Obviously, I didn't do much research on Robinhood. It was only till I saw the CEO do a podcast on the Iced Coffee Hour where I was like, okay, I can see the vision. Before, I didn't see the vision. I just thought it was another, just app, that has low margins, and I didn't really see the vision of it competing with these big banks. But just how they operate in terms of putting shareholder interest first, in terms of voting, what I've seen with them pushing this campaign for you to vote your Tesla shares, and just getting behind the people that are actually investing in the companies, the consumers, the retail investors, actually having their say, rather than just buying a fund and letting Vanguard just vote your shares for you. So that's another reason why I'm not in SP 500, just because I do like to have that control, being able to vote my own shares. And obviously my final position, IRN, it's it's a bit more speculative. With Tesla, have very high conviction. IRN, that's why I've got such a low percentage on my portfolio. I am down 18.7%, just because it is very speculative. That it is got lots of competition in that whole cloud AI computing space. So again, I could 10x my money in it, but obviously I could lose lose 50% again. So, and my conviction's not as high as Tesla. So again, my position is a lot lower. So my current value is 141,705. As you guys see, over the past week we are down £10,000. Rate of minus 6.6%. As you guys can see, net deposits just shy of 100k. So that is 5 years of effectively maxing out my ISA. Even though I have had my account over six tax years, I've only been investing for 5 years, just because. So I could technically have put 120,000 in, but the first year when I was first getting invested, I was 18. I didn't have 40 grand to put over 2 tax years when I first started. So I was just lucky. I think I put in 18,000, which is nearly 19,000, which is why I see 98,000 over those first 2 tax years. And then obviously after that, every year after that, I've just maxed it out. So I'm pretty happy with how I've done. Obviously, if you look at my max performance, 100% rate of return, so basically doubling the size of my portfolio every year. Obviously that includes new money we put in, but even so, I'm pretty happy with that performance. I will do a video on comparing my performance with whether comparing it to just investing in the SP 500, because I think that'd be interesting to look at. I think I would be slightly better, just because a lot of the Tesla returns have come in later, especially in the last 3 months, so it would have taken into account all my money, whereas obviously the S&P 500 has done better over that 5-year window, but the start would have had less money to have that full growth over the 5 years. Hopefully, you understand what I meant. It wasn't the clearest when I was trying to explain that. Anyway, so I've got £26 in cash, 141,000 investments. Majority of that is Tesla. I've got Robinhood, IRN, and Nvidia. And obviously, this is what a lot of you guys clown me for. When you look at my asset allocation, pretty much just under 99% in Tesla. Got some Robinhood, IRN, and Nvidia. Anyway, guys, thank you so much for watching. Please make sure to like, subscribe, and share this video with anyone who might be interested. And I just want to, if you're still watching this video, I want to say a massive thank you to you guys, because my last video was my most liked video. It wasn't quite my most viewed video, but it was my most liked video out of all of my videos. So I just want to say thank you so much for the recent support. And as well, guys, we hit 500,000, not 500,000, 500 subscribers. God, 500,000, maybe one day. But we hit 500 subscribers, and I just wanted to say everyone who's still watching, a massive thank you. And yeah, road to 1,000. Let's hope can hit 1,000 and get monetized. Anyway, guys, thank you so much for watching. If you guys did want to get a free fractional share from Trading 212, click the first link in the description. Anyway, that's it for me today, and I'll see you in the next one. Goodbye.